Techno.
Let me check. Yeah, you're right.
Okay. Can you see it? Can we see? Can we see now? Is it clear? The board, is it clear?
Okay,
Can you read?
yeah. But the figures are not so clear. So
Okay.
the photo is on their group.
Okay. Send me the question. Let me send it to them. They are good. Please check. Fine, you know, Paruba, you. What?
Because they are playing, because they are okay.
Eh?
Maybe because they are too close.
Eh.
I've sent the question to that
You
page.
check your group for the question. Let's just start.
They are not.
The is recording now.
Okay. Yes.
So whether they are on or not, they will join us. And we can wait for 5 minutes to see what people say.
Okay. So I can erase this.
Yes. What's the noise? What's the noise? What's the noise? Okay, 2 people. Hello. It's now clear. Okay. I sent it to Ajibola. Good evening. Soft art. Merciola doing. Can we start? Can we start so that we don't delay our camp teacher? Please, I need responses. Can we start now?
Send the link of this new video to the group.
Six.
Probably when you start with it.
Let's start solving it. I'll be there responding to other questions.
Okay.
You just talk and just say what you want to do.
Good evening, everyone.
Good evening, sir. That's it there. Extend it a little. Okay, good evening, sir. Okay. I think I already responded.
All right. I'm here tonight to take you on the final accounts of a sole trader, which are the income statement and the balance sheet. So, as an introduction, let's just go through what each of these means. Income statement, when we say, is the final account that is prepared. When we say income statement, we're talking of our income and expenses, what goes in and comes out during the financial year of a company. So when we talk of balance sheets, what we mean is the assets and liabilities. You know, there's an accounting formula that you should get familiar with, which is assets is equal to capital plus liabilities. This is the accounting equation that we are going to base everything we are doing in the balance sheet on. And in the question they sent to your group, there's one very important detail that you should know before we start solving that question. We have accruals and prepaid. Basically, when they're testing you in any statement, any question that involves this statement of this income statement, they are always going to test you on your knowledge of accruals and prepayments. So when we have accruals, it can also be divided as accruals in income and accruals in expenses. When you have an income and there's accruals in it, what accrual mean is something that is due but not yet paid. Let's say you have rent. I mean, we are talking of income. You're receiving interest from the bank, let's say for some investment. So when the interest is due, if the bank doesn't pay it on time, then you count it as accrued income. And prepaid is when they pay it in advance. You are expecting money tomorrow, but the money comes in today. So you call that prepayment. So in your accounts, when you get prepaid, you minus, and accruals, you add. And for expenses, it's the opposite. Minus, you plus. This is due to the concepts and conventions of accounting. There's something we call accrual basis. Accounting information is always recorded on accrual basis. What this simply means is that you record what happens this year. Let's say you make a credit sale this year, but the money is coming in next year. So you're going to have to record everything that happens this year in the income statement. So without wasting much more time, just get familiar with this concept. We are going to move forward to solving the question. So, okay, let's go through the basic items that you will find in the income statement. In the income statement, we have something as sales. This represents the total cash or credit sales made during the year. And then we have return inwards. So like when you make a sale and your customers say this good is faulty, I can't take this. So there'll be return inwards. And this amount will be deducted from your sales. And then we have purchases. Purchases is all the amounts that is used to obtain goods meant for resale. When we stock goods, if you bought a machinery, that is not considered purchases, it's a capital expenditure. So when we're talking purchases, it's only what you buy that you intend to resell to make a profit. That is the only thing we count as purchases. And then we also have return outwards. Just like return inwards, return outwards is when you have a purchase and you find the goods faulty, you're going to return it, and then you're going to deduct that amount from your purchases. Next up, we have carriage inward and outward. When we're talking carriage, it's just transportation. Carriage inward is when you bought something and you pay for the transportation to bring it into your company, into your storage. And outward is when your customer buys something from you and you deliver it to their doorstep, like all this online shopping. All of the delivery cost is counted as carriage outwards to them. And then we have expenses. Expenses are all of the running costs of the company, such as rent, electricity, depreciation, and all those things that the company incur for the day-to-day running of the business. So now let's get to solving the question. We'll start with the income statement and later we'll move on to the balance sheets or statement of financial position. So the question is asking us to prepare the statement of profit or loss. So we have statement of profit or loss and other comprehensive Now, you should take note of something. Writing this, it might seem like a waste of time or like you don't need it, but this itself carries marks in accounting. Just writing the topic of what you're doing so that the examiner knows that this is what you're doing. And then right after that, you have two Naira signs here. All of these small details have their own marks that they carry. In accounting, we don't just mark the final answer and the working. The way you present it is also very, very important. So when solving a question like this, it always starts with sales. And from our question, we have our sales to be 400. And remember when I said we have return inwards, return outwards. When you have sales and the goods is faulty, so your customers are making a return, you consider that return outwards. So let's just see. Return. So this is the sales amount that we are going to use at the end of the day. We already deduct our return inwards. Now, after dealing with the sales, we move on to the cost of goods sold. Cost of goods sold. Now, the first item here, let me just put this in this one, is our opening inventory. And in the question, we have our opening inventory to be 34,300. Next, we have purchases. And under purchases, I would like you to go to additional information number 8. It says goods costing 1,200 were taken by the owner for private use. This was not yet recorded in the books. I'm sure you are all familiar with the term drawing. Drawing is when the owner takes goods from his purchases for his own personal gain, for his own use. So when they say this has not yet been recorded, we are going to make the effect now. We have our purchases in the question to be 368,400 minus 1,200. So this is what you're going to use for the purchases, which will now give us a final answer. After our purchases, we still have return outwards. And then, we have carriage inward. When you're buying something and you're paying for the transportation, you are also going to consider the cost of transportation. Carriage inwards. And note that it's only carriage inwards that will appear under the cost of goods sold. Carriage outwards will be treated differently. We'll get that in a short while. So
Mama, you increase the volume a little.
on.
I wanted to connect the
Okay, then.
microphone.
Okay.
I'm looking for the battery.
So this is our goods available for sale. So when you have your opening inventory together with your purchases, return outwards and carriage inwards, what this means is these are all the expenses you incurred while obtaining your goods that you intend to sell. And then at the end of, once you get your goods available for sale, to get your cost of goods sold, you will include your opening inventory. And this amount will not be added, but rather it will be deducted from your goods available for sale. So, this is our cost of goods sold. I like to believe you all understand what everything I did this one. We're just going to erase it for now. Can I erase this part as well? Okay. So now we already have our sales that we're using.
Maybe what we should do is, instead of dividing the board into three, write it at once so that it will be clear.
Okay.
Then
Yes.
once we finish, we clean it.
Yeah.
Then it will be
So
clear.
let me give them a bit of time to go through this one.
Yes. But they're saying it's not clear. How about the volume? I think the volume is better now.
The mic is on. Is the mic on?
Yes, the mark is on. The mark is in.
Okay. Can I continue?
1 minute, please. I want to see if I can screenshot it.
No, this is not it. Direct.
Let's use the watch so that it will be very clear.
So now we have our sales.
And it's better now.
Yes. So,
It's clear now.
yes. Now what you're going to do is you will take your sales and your cost of goods sold. You are going to deduct this cost of goods sold because, as you all know, purchases is an expenses. What this figure represents is the cost you incurred on getting the goods into your company. So once you work this out, the answer that will give you is your gross profit. Now, remember they said statement of profit or loss. Up till your gross profit, this part you're already done with half of the first question. You are done with your trading account. So the trading account is just sales minus purchases. This cost of goods sold is your purchases. You have your gross profit.
Okay, yes. I see nothing else. Still.
Now keep this figure in mind. We're going to come back to it later. And now we can move on to our expenses. Now, while going through your expenses, make sure you go through all the additional information one at a time. Now, let's quickly run through them. Inventory at 31st December, that was our opening inventory that we used. Accrued expenses were salaries 1,800 and electricity 80. So now remember we talked about prepayment and accruals just now. So when we have expenses, okay, let's just quickly work that out before we go ahead so you understand where we're going. When we have accrued expenses, you take the figure you have, yeah. Let's just call this workings. And the first expenses that we have accrued is our salaries. Salaries. Accrued expenses is an addition. So you take the 40,600 plus the amount that's being accrued, which is 1,800. So this amount is what you're going to write under salaries in your final answer. Next, we have electricity. The figure given to us under electricity, we have 34,000, no, 14,900. And the accrual is just 80, giving us a final answer. This is the amount you're using for electricity. Next, we have prepaid expenses or insurance and general expenses. Now, when we talk prepaid, you're going to less the amount. So let's start with insurance. And next, we have general expenses. Okay. Next, the next additional information is saying we should adjust the provision for bad debts to 2% of receivables and create provision for discount allowable at 1% of the receivables. The next additional information is talking about bad debts. And it's saying we should make a provision for bad debts at 2% of our receivables balance. Our receivable balance is 45,000. Okay. The bad debt that we have given to us is 400. And now the balance in our receivables is 45,000. So we take 2% of that, and then we add the difference in the amount. So the new amount, 45,000 times 2% is 900. So this is the new amount for bad debt. I already have 400 written down here. So what you're going to do, difference, 900 minus 400, that's 500. So the difference in provision, that's what you're going to do to your bad debts. And then we have provision for, they said we should create a provision for discount allowable at 1% of receivables. So your provision would be the receivables, 45, minus the bad debt that we just calculated, which is 900. Then the final answer of that is what you do times the percentage. Moving on to the next information, we have commission due but yet to be received amounted to 800. So this falls under additional income. Commission you're receiving is an income. So you take the commission given to you in the question. Commission. The commission given to us is 11,200 plus the accrued, which is 800. So, 1,000. And the next is the charges on depreciation. So they said depreciation should be charged on cost. So we just depreciation, we have motor vehicle and furniture. One is 10% and one is 20%. So of the cost. Moving on to the next information, we have rent. The rent in the additional information 7, we have rent in advance amounting to 200. The rent given to us in the question we have it as 3,800. Now, this is not rent paid, it's rent received. So it's income and it's given to us in advance. So minus 200, 600. Following that, we have, okay, we've treated these goods costing 1,200 were taken by the owner for private use. So when we get to our balance sheet, you're just going to have drawings. The drawings given. So when we get there, this is the figure we're going to use for drawings. Next information. Okay, the next information, there's no workings, we'll get there when it's time. So now back to solving the question. We stopped at gross profit just now. The question gives us other additional incomes after getting our gross profit. So let's just start with our gross profit. And please take into account all the workings we have just done. The figures of the workings are what we are going to be using now. Under additional income, the first one we have discount received. Discount received, there's no changes there. Rent received. So you're going to add up all these figures. Since this is profit and these are other incomes, you're going to total the figures, which will give us a total of. So you're just going to leave this one as it is, just leave it blank here. And we move on to our expenses. Okay, let's just first start by listing out our expenses. We have salaries. Take note that we treated our salaries in the additional information just now, so the new figure will not give us. It's a mistake here. Okay, we move on. We're still under expenses, but there's no more space, so let's move on. We have this. Okay, if you check your question, go above bad debts, you will see provision for bad debts, which is 200. So now we calculated our provision for bad debts to be 900 just now. So we're going to take the difference. So, that means from 400, from 200, our provision is increasing all the way to 900. So we're going to record the increase in the provision. In a question where the debt is reducing, you're going to minus, because bad debt is an expenses. So when the provision increases, you add it to your expenses, and when it reduces, you're going to deduct it from your expenses. So now give us a second. So we're done listing out the expenses. Now you're going to total all the amounts together. Now let's recall the balance we had after we added our other incomes, which give us okay, and then this. So you're going to total everything that you did just now. So this is our net profit. But we're not quite done with this question, because if you go to the last additional information where they say, following the recommendations of a professional valuer, the owner intends to revalue freehold premises at 60,000. So they are asking us to prepare statement of profit or loss and other comprehensive income. So this valuation falls under other comprehensive income. If the question did not ask you to include other comprehensive income, you will not touch this. But since they say other comprehensive income, the value given to us in the question is given as 46,000. And now we're saying they revalued it to 60,000. So we're going to take the profit he made on it. So we're going to say gain on revaluation. So the gain on revaluation is simply the difference of the two amounts, that is 14,000. And you add the two to give us your total comprehensive income. So this is your final answer for the first question. And with this, we are done with the statement of profit or loss and other comprehensive income. Okay, now the next item we're going to treat is the balance sheet. Before we go through the solution, let me give you some points of the balance sheet. Under balance sheet, remember the accounting equation I gave, giving asset is equal to capital plus. So this is basically what we're going to do in the balance sheet. We have our assets. Assets can now be subdivided into long-term assets, current assets. So when we say long-term assets, we're talking about assets that have a long life, such as your plant and equipment, your machineries. These assets are not used, are used in the day-to-day running, but you don't change them very often. Today, you're not expecting to sell it tomorrow for a profit. And current assets are your assets such as cash, bank, something that you use on a day-to-day. Your inventory, your flowing asset. These current assets are the things you use to run the business on the day-to-day. And this one are considered what you have in the company that you say, this is mine, such as the building, the equipment, the factories, all these fall under long-term assets. And then we have under capital, we only have owner's equity. When you see owner's equity, do not be confused with capital. These two, they are the same thing. But questions use them interchangeably, so you don't have to worry about that. And under liabilities, we also have long-term and current. So what this accounting equation is simply saying is the total of this must be equal to the total of this. So once you get all your assets, long-term assets and current assets, you add them together. Your owner's equity, your long-term liabilities, and your current liabilities, you add them together. The answer you get here must be equal to the answer you get here. There's no exception. If it's not equal, then there's a mistake somewhere. You have to go back and recheck your answer. So with that, let's move on to the solution. So when we're preparing our statement of financial position, just as we did just now, you have to make sure to write the topic of what you're doing. Statement of financial position as a so that's the topic of what we're doing. And we're going to start with our assets. So we're going to first treat our long-term assets, also known as non-current asset, long-term assets, fixed asset. You have to get familiarized with this. Assets. So we go back to the question we have. Okay, let's call this book value. This book value represents the value given to us in the books of the company. So whatever is in the question, that's your book value. Let's call this depreciation. And we can call this one net. So what I mean by net book value is simply your book value minus your depreciation will give us your net book value. So let's move on to let's start with freehold premises. Now remember that we have revalued our premises, so we're no longer taking the 46,000, we're going to take the 60,000 direct. There is no depreciation, so here net book value still remains 60,000. Yes. So next we move on to our motor vehicle. Now, if you look at your motor vehicle, we have 12,000. And then go to your question. We have something we have called accumulated depreciation. That is the depreciation that has been charged over the years. Let's say now what we mean by accumulated depreciation is when you buy an asset and you're depreciating it slowly. You bought it for 10,000 this year and it lost its value by 2,000. So next year, you're still going to recognize that the 1,000 value has been lost and you're charging the depreciation slowly until the asset becomes scrap. So slowly you're going to be removing depreciation. Accumulated depreciation here, we have it as 4,500. And then we charge the depreciation for the year. So depreciation for so your accumulated depreciation is 5,700. I did this just so that you won't be confused because we calculated depreciation and we have accumulated depreciation inside the question. So what you have to do is you add the figures together to give us your total depreciation for the year. You less the two values. And then we move on to our furniture. And here you do the same thing that you did just now. So our accumulated depreciation here is 1,000, and for the year we have 500. So the balance here is. So now we're done. Those are the only three long-term assets given to us in the question. You add all the figures together to give us. This is the value for our long-term assets.
almost done it.
Thank you. So next up, we have our current assets. Now, take note that this statement of financial position is being prepared at the last date of the business, at the end of the accounting year. So the inventory you're going to take will always be your closing inventory. You're going to ignore the opening inventory. That's not used here. It's just the closing inventory that you use when you get to your financial position. Then we have receivables. Now remember that under receivables, we already have provision for bad debts and provision for discount allowable. So you're going to deduct those two amounts. In the question, we have receivables to be 55,000. And then we have 900 for bad debts and 441 for our discounts. Now, prepayments, when you pay for an expense in advance, it's considered an asset to you because when the time comes to pay, you don't have to pay it anymore. So we'll consider it an asset up till the date that the payment is done. For our prepayments, we have 400 and 500, which we did in the workings just now. 400. Under expenses, the prepayments we have are 400 and 500. So the same way prepaid expenses is considered an asset. So accrued income is also considered an asset. Prepayments and accrued are always contradicting each other when it comes to expenses and income. So if prepaid expenses is asset, accrued income is also asset. Prepaid income is now liabilities, while accrued expenses also fall under liabilities. Since there's no information given to us on this two, we're just going to take the figure given to us from the question, that is 5,000. So that's it with all our current asset. You add the figures together, which will give us now we're done with the first part of this. Going back to our accounting equation, we have done our long-term assets and our current assets. So you're going to add the two figures. This is the first part of the balance sheet. So when we're done with our capital and liabilities, the final answer must also be 151,359. That should be the final answer we're getting. So now we start with our equity. So from the question, we have our capital. And then you add our total comprehensive income. Had this been a loss, if we had total comprehensive loss, we're going to deduct it from our capital. So less drawings. So the figure they give us plus the additional drawings. So you total all these figures, which will give us a total of this is our capital. So now we can move on to our liabilities.
That's the last one.
That's the last one. So in this question, we're supposed to treat non-current liabilities first, but the question does not have any non-current liabilities. So we can just skip that and move on to our current liabilities. Don't forget the accruals that we did in the working. And these are the only figures we have under liabilities. We add them up to give you Now, we know we already completed our total assets. This is our assets. Then we have our capital. So you add these two, giving us 1359. So as you can see, this is the accounting equation I was talking about earlier. Total assets is equal to capital plus liabilities. The answers you get here must be the same. So once you close your account, that is all we have in the statement of financial position. You just have to make sure that your assets, your capital, and liabilities tally with each other. And that's it for the question. You're done with the second part of the question. I thank you all for your time.
Okay, thank you so much, Raman. Thank you for your time.
Welcome.
Thank you, everyone. I know many of us we were not. It's not clear. It's not clear. Okay, Doctor, it's kind of blurry, ma. I can hardly see what is writing. It's not clear, sir. We can't hear. Okay. Thank you, everyone. Okay, let me just see so that you don't get
If it's not
back
clear, I can redo some of it and send them to you.
on WhatsApp.
Yeah.
No problem.
So I'll just do it on a rough
And
sheet.
send to them.
So the way
Thanks,
I
sir.
did
Okay.
it segment by segment like this, I'll just redo it and send it to you later.
Okay. Send in your questions. Questions. Man, I don't want it to be late home.
You that this week for me. Thank you for this week for me. Like, thank you for using it.
Thank you very much.
Nǹkan àwọn ẹ̀wọ̀n nìyẹn o.
Chef, when you come back, disconnect now, you tell us solution. 10 people not saying good night, everyone. If you have questions, oh, 1 minute. Good night.